Let's move right on, connect with Nooresh as well as Kunal to find out what their view is on the market and more importantly, what's due in expiry week. So welcome, gentlemen. And Kunal, let's begin with you. And I guess what happened with the Nifty Bank is rather pertinent to talk about. It started off the week with a roaring rally and maybe have fizzled out toward the end of the week, but nonetheless a 3% gain.
Yeah, I think it was a very good week for the Bank Nifty because we managed to scale back again towards that 51,000 mark. We had a touch and go moment towards the 52,000 levels, but net I think it's a very strong kind of an outperformance which had come back from the banking index, and it was also one of the weeks where you've seen so many of the other underperforming sectors making a comeback, whether it's chemicals, sugar, which made a comeback for itself. Metal stocks also, I think the fag end of the previous week made a strong comeback for itself. The only concern for the markets right now is the slowing down of momentum. So I think in the last 9 days for the Nifty, we've traded 500, 600 points on the index. So I think from 23,250 odd levels towards a point where we were almost at 23,700 odd mark for the indices. So I think in that context, the momentum is slowing down. So maybe I think we could just about try to define a range for the index. 23,200 could be a fresh short-term base or a support, and 23,800 as a resistance. The data point on Friday also indicated that it was one of the highest reduction in the open interest for both the indices, Nifty as well as Bank Nifty. So almost like a 8% drop in the open interest for Bank Nifty and a 5.5-6% for the Nifty. That also indicates that maybe market participants have taken out some position on the long side and are now maybe sitting light going into the expiry week also.
All right, Nooresh, let's get in a take from you. What's in store for us this expiry week? Because last week was pretty lackluster when it came to the frontline index, despite hitting those record highs.
So it's been a slow and steady move wherein every day we see from open to close, we don't see a major high close, but we've slowly and steadily struggled up. So it's been a struggle in this up move. We are defining a fresh new range after the volatility of 4th June. So I would expect 23,200 to hold, 23,800 to 24,000 to be the upper band and continue to stay into this. Now, this could change once we see a much more clearer move in a HDFC Bank or an ICICI Bank or Reliance Industries. All these names are perched at levels where they're very close to a trend-changing breakout possibility. ICICI Bank around 1170 is the previous high. You have HDFC Bank, which has tested 1700, 1740 for 6-8 times over the last 3-4 years. You have Reliance Industries, 3000 as a range. So once that happens, you get a fresh trend. For now, we could be consolidating in this band and the struggle should continue on the index as such.
If you like this video, then like, share and subscribe to ET Now.